Tsogo Sun today reported a 20% rise in first half profit, helped by an acquisition that offset the slow revenue from gambling as well as leisure travel. Marcel van Olok, Chief Executive of Tsogo Sun, joins us now for more. Marcel, looking at your numbers very briefly, I saw that you were investing quite heavily in your South African operations, both in KZN as well as the Western Cape and even up here in Gauteng. Rather aggressive on that front. How come?
Well, we've decided we've got a growth strategy and we're putting a lot of money into both the hotel and the gaming business. You've got to build these things for the long term. So you've got a bit of a volatile trading environment at the moment. We were pretty happy with the 9% up in revenue. But to roll out the capacity that we've been given authority for in Gauteng, for example, is going to take 2 or 3 years. And you can't wait for the economy to turn and then start building. So we've been chasing that quite aggressively, and we've got a lot of building projects on the go. In this particular period, we obviously had the acquisition of the Koi Hotel in Nigeria, which was a big one for us. That was 700 million rand. We started Maputo, so the 300 million rand project, and we've been investing locally. I mean, our maintenance capex running at about 400 million.
So, the Africa strategy then on track?
It is on track. Africa makes up probably about 25% of our hotel earnings. Hotel earnings make up about 20-25% of the group earnings. Or gaming in SA is still the big number producer. But Nigeria is a good acquisition for us. It's a hotel we've run for 5 years for a third-party owner, and we bought it. Now we own it for our own account, so it's pretty much on track for us.
How's the trading environment there in Nigeria? It's not an easy one for South African companies to do well in.
Yeah, that's why we've been there 5 years, so we were very comfortable with it, and it makes, our whole strategy in Africa is to try and invest where we already are and bulk up our operations. So Maputo is a similar example. We're building another 110 rooms onto an existing hotel that we've had for 10 years, and that de-risks your investment quite a lot.
Which hotel is that?
Sun Maputo.
Okay. So. The big story, as you say, that if one has a look at this group, is the gaming income in South Africa, which means gaming income to a large degree in Gauteng. And there's a potential challenge coming with Sun International moving its from Marula into Pretoria. How will that affect you? I mean, what are your numbers telling you, and are you objecting against it?
No, we haven't objected to it. We don't see much of an issue with that. It might impact us a little bit at Monte Casino and Silver Star, but we've got about 53% odd of the Gauteng market. Casinos are very localized in their markets, so Pretoria is a little bit unserviced, so it gets caught up by the others. But we don't see it as a massive risk. We think it will affect the East Rand more because of the way the road network works into Emperors and so on. We also think relocation we're quite keen on that in the Western Cape, so we're not going to object to Sun here and shoot ourselves in the foot there.
Is that on the cards?
The Western Cape provincial government have said they want to have a second casino in the metropole. They have a limited number of licenses, so the only way you can do that is move one of the smaller ones in. They seem to be dilly-dallying with the process, but I think it'll come through at some stage in time.
Because Grand West is the jewel in the Sun International crown.
And it's the only one in the metropole, and we think there's scope for a second one there.
What about the management changes that has happened in the past 6 months?
We took a look at our internal structures. It's quite easy to just go in and cut down newspapers and throw out the bottled water and that sort of thing, but we took a look at the whole structure and said, is this as efficient as it can be? We've got good revenue growth in SA, but it's not shooting the lights out like it was in the heydays. So you've got to watch your costs continuously, and we had a big review internally of how the management structures work, and out of that we eliminated 5 executives. I mean, it's not fun.
Eliminated? It seemed like it because they were there one day, the next day they were gone.
But it was, it was an agreed process and very professionally handled by them too. I mean, they're not idiots. They looked at it, they understood it, and they said, this is a more efficient structure. The sort of classic approach of firing the tea lady and the waiter and the driver, it doesn't really save you costs. You've got to look at all the costs right the way through.